Hi everyone, welcome to another ShareWise webinar. Today I am fortunate enough to be joined by Chris Nauer, the CEO of Challenger Gold. Thank you so much for joining me today, Chris.
No, it's a pleasure, Caitlin.
So today Chris will take us through a presentation and then we'll do a live Q&A. So feel free to put your questions in the chat below and Chris will get to it after. I'll hand it off to you, Chris.
Okay, thanks. I'll just put a deck up while we're starting and get that going. Just make sure we've got that up. Okay, so what I'm showing you now is a photo of our main project in Argentina, Hualilan. Not at altitude, great logistics. It's 120 kilometers from the equivalent of Kalgoorlie. Water to site, and your power line not too far away as well. Company snapshot. So we're South American focused. Two projects. Hualilan in San Juan in Argentina is very much our lead project. We've done a couple of resource upgrades. We've got 2.8 million ounces of gold that's open in all directions. In Ecuador, we put out a first resource, which is on 2 of 7 anomalies about 2 weeks ago, 4.5 million ounce resource, big gold porphyry open in all directions. We've done 250,000 meters of drilling. We've spent the best part of $80 million on exploration, fully diluted market cap about $130 million. We're cheap. One of the reasons we're cheaper, we just raised $10 million at 12 cents. Unfortunately, like most placements, we're now trading at 10.5. That's an opportunity, but that $13 million cash at bank gives us more than a 12-month runway and lets us meet some very important milestones that will add a lot of value. In terms of the board, my background, exploration geologist, then got into the market as a mining analyst, got out, took control of a shell. We vented some copper and gold assets in Saudi Arabia into, came with a great management team. Sort of 7 or 8 years on, we were taken over for $1 billion. Sergio Rotondo, he's our executive director, owns 8% of the company, original owner of the assets. He does all the Argentinian work. Without him, we wouldn't be as far along. And then the recent hire, Mike Zivic, who's come on as our COO, we pinched Mike from Barrick Gold. Mike was running Barrick's Velarado mine in Argentina. That's a 400,000 ounce a year gold mine. He was the second longest serving GM they've had up there. He used to drive past Hualilan and then another 5 hours up into the Andes to work at altitude. And I think eventually after he'd had a look at us, he thought, well, I can see there's a project here. And look, most importantly, he came out of Barrick with a big bonus and he's come into us and he's working the first 3 years for shares only. He wants to get some skin in the game. Shareholders, biggest shareholder is BlackRock, largest resource fund in the world. They came along again pro rata in this placement we did a week and a half ago. Queen's Road Capital is a Canadian long-only fund. They put $15 million in via a note. They had some cash flow issues at the moment. They've said, look, post sort of October, when they get another round of cash in, they're happy to go again for another note. So that takes away our sort of next stage of funding worries. And then the key difference between us and most other companies is the board, management all have skin in the game. I funded the first couple of $1 million privately before we could list it. I've got 8.5% of the company. Sergio's got 8.5%. Our chairman has got 3%. He wrote a check for $1 million in one of our more recent placements. We're not here trying to protect big salaries. We don't pay ourselves a lot. We've got the same interests the shareholders have, which is basically making a result out of the shares. What have you got to look forward to? So in Hualilan in Argentina on the left, you're going to see some significant regional exploration. We've got 2.8 million ounces over 3 kilometers, and we've got 30 kilometers we haven't explored. There'll have to be another one there, and we're starting that search now. You'll get a scoping study in the next 4 weeks, which will be the first time we've been able to wrap some numbers around the project and tell the market what it's worth. At the moment, the feedback I get from funds is they've got no idea what it's worth. So we'll address that in the next month. And then you'll get a pre-feasibility study, which if the market is terrible when that's due in the first quarter, lets us access royalty funding, which is non-dilutive. In Ecuador, we'll probably take a more measured approach in the current climate. We're waiting on 5 more drill holes, which will get into an updated resource. And then really there won't be too much done there until the market improves. Hualilan, just, the geology. What I've done there is I've overlain the geology on the topography. You can see the line of hills that runs through the center of page. That's basically a big fault that controls the system. You've had this heat source coming up below, which has provided the gold. You've got these faults across it, the Sanchez and Magnata fault. What's happened is the fluids have come up these faults carrying high-grade gold, dropped it out along the faults. The green is the high grade. You've got a series of limestone beds you can see in the hills dipping to the right, where the fluids come up the faults. It's intersected these limestones, basically dissolved them and dropped out massive sulfides along the beds. So you get a 45-degree series of loads, a vertical series of loads. And then sitting underneath it, this yellow is the intrusive that was the source of this, also contains lower grade gold. So you've got this big low grade system with a high grade halo wrapping around the edge, still open in all directions. We've got high grade gold 600 meters south. We've got high grade gold 2 kilometers north. Deepest hole we've drilled was a kilometer that ended in 4 or 5 gram mineralization. The resource, the key to this resource is it's got a high-grade core of 1.6 million ounces at 5 grams gold. That's what the scoping study's been done on. That lets us get a mine up and running cheaply. That'll be high cash flow, low cost to get into production. And that resource is still open in all directions. You can see some of these 4 drill holes here sitting down the bottom. They're all below and outside of the limits of the current resource. And this is just what it looks like in section. So pink and red are high grade. What you can see is we've got high grade material at surface, very important. Let's start it off with an open pit, which is low risk. And then we just happen to be lucky enough that most of the sort of pink and red, the high grade bits, are sort of deeper, 2 loads, one here on the southern end, one here on the northern end. So it actually hangs together really well for an underground operation below the pits as well. And then you can see here, I've highlighted our deepest hole that ended in 4 meters at almost 6 grams gold. That's 600 meters below the resource. It's a big resource. It will get bigger. At the moment, it's got critical mass. It's time to get into production and produce a cash flow and reward shareholders with dividends. I think that's the best way to add value to the share price. And this is what it will look like in the scoping study. You can see there's a couple of, smaller pits to get us going. We've got some high-grade material, 1.5 million tons of 4 that lets us basically pay the CapEx back in a year. And then we move underground into 2 sort of, well-defined zones. We could have looked at this as a big open pit, but what we've done is we focused on the high-grade core because in this market, we couldn't fund a $300 million operation. We're not adding much more value. What we want to deliver is something that's really low capital, really low cash cost, high cash flow that we can fund. And I think when that scoping study comes out, the market will see that and hopefully we'll get rewarded. And then this section just shows you some of the deeper drilling we've done. You can see here 42 meters at 6, well under the resource, just gives you an idea that, it is well and truly open. And, this is our footprint. So blue, Newmont, orange, us. The red there is the current resource. We've also purchased the underlying land. So we own 20,000 hectares. It just removes a couple of layers of red tape in Argentina. Why have we got 560 square kilometres? Simply because you don't find 3 million ounce ore bodies by themselves. The best place to find a mine is next to a mine. And if you look at where we are now, on the left, I'm showing you the current 2.8 million ounces. That's yellow outlined in black. The pink are these intrusives that are the engine that created the mineralization underneath. And you can see almost a 1-for-1 correlation with the resource and the underlying intrusive. You do get the higher grade parts of it sort of up dip just outside the intrusives at the contact. And then we've done some surface sampling recently where we got a bunch of, 40, 50, 90 gram material, 200 and 300 meters to the east of the resource. So we'll extend that up dip. And then what I'm showing you here is on the right-hand side, if we zoom out, the pink are the intrusives. There's a bunch of these we've identified. They're all the same age, the same type as the intrusive that is responsible for that 3 million ounce resource. The yellow there is where theoretically you get high-grade material around the edge of it. And then if we sort of step back and look at what we've done, we've got almost 3 million ounces on 3 kilometres of strike. We've got another 30 kilometres of strike that's totally unexplored. We've started a little bit of work over the past 3 months. We're about 20% into a proper regional program. Great success initially. We've got some 20 gram material 2 kilometres north at surface. That's actually a series of old workings in the hill that extend 2 kilometres from the resource boundary all the way up to those high grades. We're in their mapping now, so it looks like mineralisation extends at least 2 kilometres further north. And then up here, 10 kilometres north, we've got some high grade material at surface. When you look at the underlying geology, it actually looks like you've got a big sort of copper porphyry system with this high-grade gold wrapping around the edge. We've got a 2 kilometre diameter there, anomaly, which has got anomalous or high-grade, or not high-grade, but anomalous copper and moly with the high-grade wrapping around it. Looks like a porphyry system. We're just starting some ground magnetics there, which will let us image that and allow us to sort of pick some targets to drill. But you'll see sort of, some really interesting regional targets drilled in the next 2 or 3 months. And, we get one hit 20 meters at 2 or 3 well outside the resource, and I think that's an event that probably increases our share price by 50% overnight. So that's the smart way to spend money on exploration as well as advancing the studies. Ecuador, very quickly, look, it's a great asset. It'll end up being 20 million ounces, but it is a big low grade porphyry and the market's not conducive. We've got a couple of advantages. The first one is that right at our tenement boundary is a 17 million ounce gold porphyry owned by a Canadian company, Lumina Gold. They finished a pre-feasibility study. About 3 weeks ago, they got a $300 million stream financing deal done with Wheaton Precious Metals, one of the larger royalty companies. So you can actually fund a large gold deposit in Ecuador. They sort of found that by drilling a large copper and gold in soil anomaly. I'm showing you on the right and a map showing all the copper and gold in soil anomalies on our ground. There's 15 of them. We've drilled 14 of them. All of them had mineralisation. 7 of them produced more than 500 metre drill intercepts. We've got a first resource of 4.5 million ounces, which is in that black box down there. It's effectively 2 of the 7 anomalies we've drilled out. So, it will get a lot bigger. And importantly, it's got a high grade core. We've got 1.5 million ounces at 1 gram or 1 million ounces at 1.2. We're higher in the system than next door, so we get the higher grade breccias. Where that's important is having a high grade starter here in a big open pit has the potential to move the economics significantly. You end up with something that's got a 2 or 3 year payback, not a 5-year payback that you can actually fund. And this is what the resource looks like in section. The pink and red and yellow are the higher grades. What you can see is we've got a distinct high grade zone here we call the copper breccia at surface. And then, because of the topography, we could only get rigs to here. This is really quite steep. So we haven't been able to get the top of this into the resource, even though we've done some sampling up here at the top of the hill and we know it's got 5 gram material at surface. So what we're doing to address that is we're doing a series of, we call them rocks or channel samples. You basically cut a 2-inch wide channel through the rock that outcrops, and we've got to do it up steep hills, and effectively the top bit is a little cliff, but it's the same as a drill core, and that will let us get this high grade pink material all the way to surface. We're pretty conservative. We only drag the high grade material 100 meters from drill holes. Normally with a porphyry, you'll go a lot further than that. So, look, hopefully this updated resource, when we finish this sampling, gets a lot more of this high-grade material into a resource, which is vitally important. And then as to how do we get it bigger, these are 2 of the gold in soil anomalies we've got on the northern half of our concession. We haven't done enough drilling to get this into a resource. Before we'd done any drilling, we wrapped some exploration targets around those 2 anomalies, targets of 4 to 6 million ounces on both of them. And you can see from the drill results there, 770 metres at 0.4 of a gram. The top 400 metres went 0.6, 528 metres at 0.5 gram from surface to the end of the hole. The drilling that we've done on those 2 anomalies has done nothing but validate those 2 exploration targets. So, we can see both those exploration targets, which are 4 to 6 million ounces, being converted into a resource as we drill those out. And then, look, valuations and milestones. It's a terrible market, one of the worst I've seen. Where's our starting point? So we've got the same share price now as we had in the middle of COVID. Pre-COVID, we basically done 2 drill holes. We've now got 7.2 million ounces of resources, and we've got a market cap of about 130 million ounces. We're cheap. How do we advance that along? So your scoping study, I think, is going to be really important. We can wrap a value around the project. Companies normally trade at about 50% of the valuation in the scoping study. So I think when that scoping study comes out and it's a nice big number, then we get a re-rate. Updated resource in Ecuador, and then a pre-feasibility study hopefully closes that gap between the sort of $40, $45 an ounce we're trading at just based on our 3 million ounce Hualilan resource, up to sort of that 120 million, which is the market average. And then we progress into production. And, all along that time period, you've also got some regional drilling targeting what'll be some really interesting looking targets at Hualilan. If we find a second Hualilan, get a sniff of it, then we probably add, 50% to our share price overnight as well. So, look, just to wrap up, why buy us? Yes, we're cheap, but we've also got, a path we're following that adds significant value, gets us into production where we'll end up paying shareholders, big dividends compared to the current share price. Strategy is that Hualilan in Argentina provides a low cost, high cash flow source of revenue. It then funds Ecuador, which is, it's a big company asset. We're in discussions to monetize that, looking for some alternative funding for it. But, right now we're focusing on Hualilan in Argentina, and based on Hualilan alone, we're significantly undervalued. And, Ecuador, that's just optionality on top. It will end up as a 15, 20 million ounce resource as well. And hopefully we end up with a similar market cap to Lumina Gold, who've got the 17 million ounces next to us. They're trading on the TSX, and I think their current market cap is about 220 million Canadian. So, double our market cap. So there's a lot of upside in Ecuador as well. Thanks, Caitlin, and happy to take any questions.
Thank you so much, Chris. For anyone that just joined in late, please feel free to pop in any questions down below. But to get us started, you mentioned, that the share price is very undervalued right now. But considering how much potential the company has, what do you attribute the cheap share price to?
Yeah, so look, I might jump to a second slide. So there's a couple of factors at work. First thing is our lead assets in Argentina. Yeah, you've got 100% inflation in Argentina. We can work over there quite well, but a lot of the funds are a bit concerned about Argentina at the moment. I think, where that actually disappears is elections in October. So, you've got, I think a change in government in October and things in Argentina start to improve markedly. But you've got the perfect storm of an Argentinian asset. We've just had to raise some money, which was the sensible thing to do. And this chart here shows you the market we're dealing with at the moment. So what we've got is basically from 2020, we've got the yellow are the gold producers, the orange are the gold explorers. And for the last sort of 8 or 9 months, there's been a total disconnect. The gold producers have all risen about 50%. The gold explorers like us have fallen another sort of 10, 15%. And this is on share prices based at the end of May. It's actually got significantly worse with tax loss selling. So you've got a disconnect between how the market looks at companies like us and how the market looks at companies like us in 2 years' time when we're on the verge of getting into production. So you've basically got the perfect storm of why I think we're cheap.
And going back to the elections in Argentina you were talking about, how and why might the elections be favorable for the company?
So at the moment, the current government party is the Peronist Party, which is the left party. Their stated economic policy is that it's okay to print money so long as you create jobs. If that money you print is used to create jobs, it doesn't create inflation. Here we are, Argentina's got 100% inflation. It also hasn't helped. They've had one of the worst droughts in the last 2 years, and 80% of Argentina's US revenue or US dollars comes from agriculture. So again, you've got the perfect storm in Argentina. You've got two exchange rates, the official exchange rate and the non-official. There's a 50% difference between them. The only certainty to export dividends if you're a mining company right now is to basically export it non-official, where you lose 50% to cross that. Historically, those two rates have been really close. The incoming party is, look, the Peronists are actually quite business friendly. They know that you need mining. The incoming party's policy is that they want to float the peso and get those two exchange rates back towards parity in stages. stop printing money, sit down and start these reforms the IMF have indicated they need, and you just get a much more business-friendly environment. And for an existing gold company, and look, this doesn't affect us for 3 years until we're in production, but you're an existing gold company, you can all of a sudden start to get your dividends out without having to cross a non-official exchange rate spread.
And what's happening in South Africa?
So look, South Africa, we've got a legacy asset, which is an oil shale asset, a shale gas asset. Look, it's a great asset. The company, it's well before my time. We vended the assets into the old Challenger Oil company and retained that asset. I think back when it looked like that asset was being awarded, Challenger had $100 million market cap. You've now got noise again. The government is actually auctioning off some of the concessions around us that were given back by Shell. They've acknowledged to us that we retain our priority application rights. I mean, look, that asset doesn't fit with a South American gold company, but there's some real value in that asset. And I don't know whether we get that concession awarded in 2 months or 2 years, but, when we do, there's some real value there. And we'll do something with it to, get that value back to shareholders. So, hopefully we get a nice bonus out of South Africa.
And a viewer would like to ask you why you didn't wait until July to do the raise. He says, I feel like he blindsided investors doing the raise just before the Ecuador MRE, and the market has now dumped all shares, thus sending our share price off a cliff.
Yeah, look, and it's a good question and it's a valid one. And I suppose that chart helps sort of show the answer. So where we got to is we had an Ecuador resource. We basically got to the point where and we'd run a process about 6 to 8 weeks earlier where we'd spoken to some quality funds about potentially doing a capital raise. And the feedback we got from all of those funds is we're not doing anything until probably the end of the third quarter because we're worried about the market. So we sort of get ourselves in a situation where we have a catalyst, which is an Ecuador resource. We come into a market where, it wasn't conducive to getting value for resources like that. So the risk was we have 2 choices. We got approached by the brokers while we're in trading halt for the resource and said, look, we can get you $10 million now at 14 or 15 cents, which was a good outcome for shareholders. Unfortunately, by the time they got to where they got to, the company had to find the last $2 million and it wasn't done at 15, it was done at 12. The book was far worse than it looked like. You've had $2.5 million of that placement stock has come straight out. That's where 95% of the selling in the last 3 weeks has come from. Not ideal. However, we don't have to slow down in Argentina. We can keep advancing the project. Really, the key for us was we needed to be able to get through until after the elections, which probably finalised in November. And the current cash in the bank wouldn't quite do that. So we have a choice. We've got a catalyst. The money's there. Do we take it or do we roll the dice, put a resource out? And if the share price doesn't go up, then you potentially got to come back and raise money at a lower price, if you can raise money at all, because you don't have a catalyst. And, look, I'm not happy about the share price. But I think given the way the market's gone since we've done that placement, if we hadn't have done that raise right now, we wouldn't be able to raise money.
And how much cash have you guys got now?
So we've got 13 million in the bank, which gets us through for at least 12 months. And it also importantly gets us through to a position where, based on our Argentinian pre-fees being finished, we can draw down royalty funding if we need to, or we get to the point where Queen's Road Capital have actually sold one of the larger positions in their portfolio and they will want to average down. So we've got 2 options now, whereas had we played that card now and used Queen's Road, it would have been difficult, but I think they would have done it. You don't have a backstop, you have a recession worldwide and the market gets ugly, you're really jeopardizing the company. Whereas now, when we were running Citadel, we raised money at 3 cents to start, 10 cents, 28 cents, and then in the middle of the GFC, we had to do $10 million at 10 cents. Where we are now is eerily familiar with that. 18 months later in Citadel, we were taken over at 60 cents.
Yeah.
So it's one of those things. It wasn't palatable. Yes, look, we did blindside shareholders. Had we not done that, the company probably is at risk right now, whereas, you know, the company's not at risk. But we've got the cash to deliver on milestones. We don't have to slow things down. Yeah, I think in hindsight, it's the right decision. Certainly it was the better of two bad outcomes.
And what will Hualilan cost to get into production?
Yeah, so look, and these numbers will come out in the scoping study. It's going to be very low. You know, it's something we can fund ourselves. You're talking something 100 to 150 million US.
Mm-hmm.
We can get project financing out of Argentina with the new rule where you can keep 20% of your revenue, which is 40% of cash flow in Argentina offshore. Then project financing traditionally is open for us. We've spoken with streaming and royalty groups. There's some royalty and streaming funding there for us. You know, Hualilan, it's something, you know, as a company right now, we can put into production. We're not going to close the gap, you know, and we've done it that way for a reason. I think if we try to turn Hualilan into a $500 million CapEx project that's producing 300,000 ounces a year over 8 years, right now we couldn't fund that and the market would know it. Whereas if we turn Hualilan into something that does more than 100,000 ounces a year with a very low cash cost and low capital expenditure and a 12-month payback, then the market knows we can fund that. And, you know, that's what Hualilan will be.
And to end, what are the company's most important milestones and when are they due?
Yes, so look, key milestones are going to be this pre-feasibility study in Hualilan, which is 4 weeks' time. Oh, sorry, not the pre-feas, the scoping study in Hualilan, which is in 4 weeks' time, which we can come out and say, this is how much gold it produces, this is the cash cost, this is what the project's worth. Other big milestone will be pre-feas, which is end of first quarter next year, which is a lot like the scoping study, but done, you know, to plus or minus, you know, a much higher degree of accuracy, and that lets us access royalty funding. You've also got ongoing exploration in Hualilan, where, you know, one drill hole that gives us a sniff of the second Hualilan will re-rate us probably 50% overnight, and that's ongoing. And then, you know, Ecuador milestones, which in the current market I think are less important. You'll have a resource upgrade, and, you know, we're running a process to see if we can get some external funding into Ecuador before we spend any more money on it. I think, you know, we can get some external funding successfully in the next 3 or 4 months, then I think that's also a key milestone and a re-rate event for us.
Well, it seems like there's a lot of exciting things happening, and especially until October when there's a government change in Argentina. So there's lots to look forward to. Thank you so much.
No, and thank you very much for having us on. I really appreciate it, Caitlin. And you know, look, anyone has any questions, you know, on all of our ASX releases, we've got, you know, my contact details. Feel free to pop us an email or give us a call.
Great. Thank you so much, Chris, and thank you everyone for joining.
Thank you. Bye-bye.
Bye.